Hey everyone, welcome back to your weekly market outlook. This is for the 14th of July 2025. So let's get started with what's going on in the market last week. So we got the RBA as well as the RBNZ, and both of them basically put rates on hold. We've got statements coming up from the RBA that they are waiting for the end of financial year numbers to start coming in before making further decisions on whether or not to start cutting interest rates again in Australia. So because of that statement, it doesn't cause a lot of impact into the market. Market's already pricing in for that cut to happen. Postponing that cut by a month wouldn't cause a lot of problem at this point in time. So nothing new happening on that side. FOMC meeting minutes also details what we already know, that the FOMC is not able to cut interest rates because of the potential for inflation to pick up from tariffs that is going to take into effect. Some has already taken into effect, and we're already seeing that potential inflation starting to kick into the market, which is what this week's market is going to be. It's all going to be about the inflation number from the US, and we're expecting inflation number to pick up from 2.4 to 2.6, and also for the core CPI numbers expected this one to go up from 2.8 to 2.9. Monthly gains on both the CPI as well as the core CPI expected to push up from 0.1 to 0.3% for both of them. UK inflation number, this one here, we're expecting the inflation number to remain stable at 3.4%. Other than that, we have the Aussie unemployment rate, which is going to be on Thursday. This one here is expected to remain stable at 4.1%. We also have the unemployment rate from the UK, also expecting this one to remain stable. I believe it is at 4.5 or 4.6%. All right, let's take a look at the technicals. For the Aussie here, we can clearly define the channels that we are in right now for the Aussie USD. My view remains the same, that this is likely going to be in that rangy, choppy market for the Aussie USD. We got immediate support at 65 cents, immediate resistance at 66 cents, a stronger support coming in at 64 cents. Momentum is not indicating any momentum for the Aussie, so this one here is likely going to be a grindy, choppy move inside the channel that we have here for the Aussie USD. The Euro USD, this one we mentioned for a potential technical correction, and we are now looking at that technical correction. We have exceeded 23.6%. This one might correct all the way down to 61.8%. We got support coming in very near at 1.16, and below that a stronger one at 1.15. But other than that, the structure on what the trend is on the Euro, this one remains strongly to the upside. It's just that we are within that technical correction, which is a very similar situation with the sterling here. Last week we mentioned that the technical correction for the sterling is much more defined. Right now we are near completion of that technical correction. We are now at about 78.6%, very close to the Ichimoku cloud. We also have order block at about 1.3450, and this would actually be the first level to test this week. If that level holds, then yeah, we might actually end that correction. But looking at the RSI and the stochastics, there actually might be more room for a deeper correction. If we take a look at how thick that Ichimoku cloud is, price could actually retrace all the way down to 1.33 and 1.32, and would actually still be, inside that Ichimoku cloud. It wouldn't actually transition below the Ichimoku cloud. That would actually keep the longer term trend intact. So for this week on the sterling here, because we started the week very close to the support level, there is a high probability that this support level actually wouldn't hold. So 1.3450 might not hold, and we could actually see a much deeper correction closer to 1.33, 1.32 on the sterling. Now with the dollar-Japanese yen symmetrical triangle broken, we also mentioned that if that symmetrical triangle is broken, it will actually transition price above the Ichimoku cloud the first time since March 2025. That's a good 6 months. And this would actually kind of set a new pathway for the dollar-Japanese yen for the rest of 2025. And in terms of what's going on with the momentum, the RSI has already been trading above the 60 level since last week. So it would actually indicate that the uptrend might actually be picking up speed. Stochastics has a lot of room to go to the upside, so there's actually one resistance to watch out for is actually 148. Once we clear off 148 early this week, the next available one is going to be at 149. Beyond 149, we actually don't have a resistance at all until price gets to about 151. So that's the view on the Dow Jones in terms of trend transition. I think we are witnessing that trend change happening last week. Yeah, so immediate resistances 148, 149. Once we clear that levels off, there's actually not a lot to hold the Dow Jones until about 151. All right, so with that, good luck with your trades for this week, and I'll see you soon.